None of the
Okay,
conferencing systems do great at letting you see, you know, what the audience is seeing. You know what I mean? So,
very
okay.
true, very true.
Phew.
Okay, now that technical difficulties are moved on,
This is why I
I
run
know
two
we have
machines.
very wise. Not your first rodeo, huh? I know we have a handful of other people that will be joining us, so we'll just let them add in as they will. But we're excited to have you here with us, Nicole. Nicole's been a friend to the Kaysville Small Business Development Center and the VRC for quite some time, so we're grateful for our partnership with her. She's a business entrepreneur coach. She's done this a lot of times and helped a lot of people accomplish great things with their companies. So today we asked her and Nicole Call, who's a good friend of ours as well. But Nicole gets to welcome a missionary home today. So we're gonna let her off the hook. But these two wonderful women have collaborated and put together a great message for us to have a better understanding on the right way to own multiple businesses. So Nicole, we'll turn it on over to you.
Want me to get started? Okay, perfect. Now you gotta let me share. Let me just make sure I can share. And there I think so. All right. Can you guys see that okay?
Yes.
Okay. So as Amanda said, Nicole Call and I were going to be the Nicole Squared Hour. That was our plan. And she has a missionary. I think they're at the airport like right now. So she really couldn't be with us today, but she has been so gracious. She gave us a whole lot of really great insights that I'm going to share with you on her behalf that were very helpful. So we got to have a legal disclaimer, right? As soon as you got an attorney, I said, do we need a disclaimer? She's like, that sounds good. So basically, call your attorney. Okay, call your attorney. Don't trust just what this is going on, but call your attorney. So as she and I talked, we really identified three main reasons why you might want to have multiple entities. Because when Amanda and Kevin said, "Ooh, multiple entities," we were like, "Really?" And yeah, people are interested in that. But you know, why is it a good idea? One is for business reasons. We'll talk through those. One is obviously ownership reasons, and then there are some very solid legal reasons. And again, Nicole shared with us some really good compliance things we need to make sure that we follow in order to keep that legal shield intact. So, oops. All right, here we go. So business reasons, and I started with this one because this is, of course, my space as opposed to legal space, but they all tie together. So really, if you have a new concept that's quite different from what you're doing, if you have a new or different customer or market or channel, which sometimes is a surprise, but maybe you have really different channels and that could cause some conflict. Maybe you need to separate that way, or a new or really different product or service or technology. Or finally, the new entity may disrupt the old entity. And the example I love, well, first of all, hopefully you've all read Clayton Christensen's work on disruption. A man with Utah ties, but Harvard pedigree, who's now not with us anymore, but who wrote really the seminal work on disruption. And the example I like is Dish Network. We were Dish Network satellite clients for 20 years. And the price just kept going up. We just got so tired of it. And Dish bought Sling probably 10 or 15 years ago. And Sling is, it's on Roku. It's basically a streaming app for television, and it's a competitor to Dish. Dish owns Sling. Dish and Sling are run separately as separate entities, different customer service, like the whole thing. And so when we left Dish to go to Sling, the Dish guys were mad, Sling guys were happy, right? Even though they're the same ownership. So if the old one is going to disrupt the core business, you can't be successful if it's embedded in the old entity. So I'm going to give you a live example because that always helps me. Enclavix, that's our artificial intelligence software company, and our focus is extracting context and meaning from unstructured data with a focus on helping entrepreneurs and innovators. Our core brand under the Enclavix umbrella is Venture Wrench. Now, Venture Wrench could be spun out, and we'll talk about some examples of how we might choose to do that. But as of right now, it's a brand because it's our first commercial platform for the Enclavix AI platform. And the target is entrepreneurs and CEOs and young businesses and innovators. So Venture Wrench has its own website, but when we do, for example, a press release, it's under the Enclavix press release mantra using the Venture Wrench brand. Okay. Now, about a year and a half ago, the state auditor of the state of Utah, who my husband Brad and I have known for a long time, needed some help on creating a brand new transparency website for the state of Utah. We've had a site for over a decade, but the site that was originally built all those years ago was failing. And the vendor really, despite a lot of help, couldn't get it going. And so the office changed to an off-the-shelf product. It was supposed to solve all the problems, and it didn't. And so Utter Dougall's known Brad for a long time and said, can you help us build a custom site? And he did. And it's working great. People are really happy. You're getting a lot of great feedback. It's delivering on all the promises it has had for a long time. And so Brad and I looked at each other and we said, that's an interesting business opportunity. Of all the states in the United States, about half of them, when they're kind of graded on their financial transparency, get a C, a D, or an F. So pretty much not acceptable. And Brad's been able to build a framework so that now instead of being a custom development, it's semi-custom. Basically, the framework is very tight. And then the only custom work is linking it to the state's financial data set. So it really shortens the time. So you get kind of the pricing of an off-the-shelf product with the customization of a truly custom product, right? So we said, that's kind of an interesting business opportunity, but here's the challenge. Does it fit under the Enclavix umbrella, right? Let's see. It's different technology. It's a big data platform, but it's not an AI platform, which is really how we try and brand Enclavix. The target customer is different, right? It's governments, particularly state and local governments, not, entrepreneurs and innovators. Again, really different idea, different focus. Everything's different. The only thing that's not different is the ownership is not different. So we said it needs to be its own thing. And we'll also talk about some of the legal reasons to separate as well when we get there. So we created Stateview LLC. Stateview.com is its website. It's completely separate. Brad and I have the same ownership of Stateview as we do of Enclavix, but he is the point person and his expertise at Stateview. And he's the CEO and the CTO for Stateview. So I just wanted to share kind of a practical example of kind of how to think through why would you split, because there's a cost, right? You've got to renew the entity, and you got to have a bank account, and you got to have taxes, and right. So that cost is not free. So just a couple thoughts. Get a good name if you're going to have more than one entity. I encourage different names unless they're closely related, right? So state insurance companies have entities in each state to limit liability for some of the legal reasons. Well, they name them very similarly, but there are some real challenges if you have a main entity that has a brand, and then you're creating a new entity that will also have a brand if you name them very similarly, because when you search, most people search for like the first word. Search for the first word, you're going to get the original company because it has an established brand, and the new one will never get a chance to be made visible. So this, we're going to send these notes out. I think Amanda's ready to do that. I have a blog post on picking a good name, because in tech especially, there are a lot of bad names, right? But don't include your founder name, get the domain, preferably easy to say. Now, Enclavix fails on this part. We named Enclavix after an enclave of talent, but people have a hard time, Enclavix, and they have a hard time saying it. So that's one, we fell down there. But like skip all these descriptive names, labs, tech, med, don't do that. All right, so that's just a little aside. If you're going to name a second entity, pick a good name. Don't make it a twin of your first entity. All right, so let's talk ownership. So this is a common reason to have a new entity. So ownership of the new entity, you want to be different than the existing entity. Now here's an example. Here's a couple of examples, right? So again, we could spin out Venture Wrench if we wanted to. It's kind of pretty self-contained. We could do a license of the technology. We could spin it out. Why would we spin it out? Well, let's say we wanted to bring on a third partner to really help us take us to the next level, that had some skills that we wanted to tap into, and we wanted to share the equity with them. We could create a new entity, Venture Wrench LLC. We could give them a share of the ownership, And then we could license that core technology and come up with arm's length licensing arrangements with the core technology and all the IP that treated us fairly, but also gave that new person an opportunity to share in the growth, right? So that's an example. Creating a joint venture, right? Really, if you're going to really do something deep with another company, a new legal entity is almost always part of the package. So that's an example. This is again some blogs, so you can grab a screenshot or just wait till we send out the slides. These are a couple of slides on ownership issues, having buy-sell agreements, how do you slice the pie as founders, some things like that I thought might be helpful to you as you contemplate this. And then Travis, I think you asked this question. Maybe I think you emailed it out about some different entity structures. Am I remembering that right? Was that you?
Probably. This is all very interesting to me because I have
Good.
I have multiple businesses and hoping to create some more. So
Awesome. So C corporation, C corp comes with a lot of overhead, right? Talk to your attorney about details, but a C corp comes with a lot of overhead. Primarily, the corporation pays taxes, and then any dividends that you as an owner get are also taxed, right? So you have this double taxation problem. So I like to think about a C corp as what's the trigger that would prompt you to move to a C corp? Having outside investors, right? So if you're going to raise money from particularly formal investors, venture capitalists and the like, you'd want to have a C corp. S corp, I cannot tell you why anyone would want to have an S corp. They were important back in the day before you had an LLC and you had to select the right tax treatment in order to basically pass through the taxes. So maybe an attorney can tell you why you'd want one today, but I would never pick one. And then an LLC is all the benefits of that corporation, but key value pass through on taxes. Now, sometimes entrepreneurs will start something new and do, oh, well, I'm going to raise money eventually, so I'm going to do the C corp. And you immediately have like all this overhead. So when we started our first company, our pretty high powered attorney said to us, look, started as a Utah LLC, it was DuBox. Started as a Utah LLC, go raise your money. And then when we're ready to close, so all the investors wired their money to the escrow account of the attorneys. And on the same day, they poured over the assets of the LLC into a Delaware C corp, and then funded this new C corp with the funding from the investors, and invoked all of the agreements, for ownership and all of that with the C corp. And that all happened, in the moment of closing. And so that worked out great because while we were raising money, we just had this little C corp, we didn't have all this complexity and overhead. So hopefully that was helpful. So this is from Nicole Call, and she really gave a lot of thought to this. It would have been really fun to have her here today. But 3 legal reasons for creating multiple entities, okay? So one is kind of obvious: insulate the risks and liabilities of one business from the other, and comply with formalities. We're going to talk about that because that's an important element. But this is just the everyday operating risks and liabilities, right? You've got a business, it's going great. You decide to start something new, and it's got requirements for equipment or obligations or whatever. And maybe it doesn't do as well as the first business. And if you just incubate the new business under the old business, then any liabilities from that new business are accrue to your core business. Now, I love a book called Once You're Lucky, Twice You're Good. It's written about Silicon Valley, but the premise of this author is, hey, you can get lucky, you can grow something big once. It's doing it twice that's hard. And in fact, this seems to apply to entrepreneurs of all kinds, right? The first time you can get lucky, but doing it again is not as easy as it sounds. And so, my view is keep that in mind, and then protect yourself and protect your initial business by capturing the risks and liabilities in a new corporate entity. Now, one of the things that Nicole pointed out too is asset protection, which is it's a variant of this, but she said it's very common, like in real estate. someone who's doing real estate deals or who has a portfolio of real estate assets, like, I don't know, you've got a bunch of gas and goes or something, each of those real estate entities can and probably should, I think, from her commentary, be held in its own LLC. Those LLCs can all be owned by the parent company. But if there is a problem with a property, or you find asbestos or it's oil contamination or whatever, then the liability is closed only to that property, and it doesn't affect any of your other properties. Okay. And then tax purposes. So we'll talk about, so I want to talk about the formalities. So a couple of things she emphasized, and I'm assuming, given how strongly she felt about this, that this is a common problem, right? So an owner has more than one business and they get a little casual. So she's like, you've got to be very careful to protect the corporate shield. You cannot commingle assets. You've got to keep your bank accounts separate. Any transfers between entities, you have to document. And that, it doesn't mean just like, oh, I did it. Why did you do it? Was it a loan? Was it an investment? You know, what was it for? Was it a purchase of services, right? Because, you know, one business can purchase services from another business. That's fine. That's a completely legitimate, but you better document it. And before you just sort of send money around. And again, apparently this is a concept that happens out there. Real property again, so an entity for each property. And then intellectual property. And we'll talk some more about this when we get to taxes. But this is a common thing in IP heavy businesses, to create an entity that just holds the IP. And then all the other entities basically license that intellectual property. Again, it has some it can have some tax implications. And Nicole continued and said, look, if you've got equipment or tools that both businesses can use, one of them's got to own it, one of them's got to lease or rent it, right? Employees, let's say you have, you know, fully staffed company over here and you've got baby company over here. Well, then put together essentially a leasing agreement, employee leasing agreement, or a company services agreement, where, you know, the new company pays the old company for business services, because that's a thing, and document that as a contract again. Customer disputes, like, these are obviously concerns that your lawyer has. Don't do any of these things, and these hurt no matter what, right? And then loans, if you're going to take out a loan, make sure you've got it assigned to the right business, okay, and for the right purposes. Now, she suggested, you know, there may always be tax benefits depending on how you structure your entities. Again, for IP, you can also do it, for example, if you want to pass on to children or grandchildren, you can use a new entity and then some licensing and some purchase mechanisms to put money in the hands of people in a lower tax bracket. This is one about the IP issue. So Apple and most of the big tech companies in the United States, their IP is owned by their Irish subsidiaries. And this actually went to court. The EU sued Ireland and said, it's not fair, Ireland, that you give Apple such a low tax rate on this IP holding entity in Ireland. It's cheating everybody else out of taxes. And they actually lost. The EU lost that case. Ireland is a sovereign country, and they negotiate whatever tax rate they want. So this is actually a common, again, many of the big tech companies have IP holding companies in Ireland because they have a very attractive tax rate compared to other parts of the EU and even compared to the United States. So we don't always get to do that, the rest of us in the world, because it's a very expensive process, but you can see the idea, right, of basically entities giving you protection and benefits as you structure your business. And then this is from Nicole, caution, right? Be careful with your taxes because, and this is something I'm not sure I had thought about, but if you are late on your deadlines, then it can pierce the corporate veil and you can lose that protection of that corporate veil. You know, take appropriate advantage of tax breaks, but don't get yourself in trouble. Don't borrow from withheld, you know, payroll taxes. I mean, you know, hopefully our community doesn't need to hear this, but at the same time, obviously these are things that she really sees. And then use sales tax software to calculate the ever complex software sales tax. Jeremiah, do you have a question?
No, I'm good. Sorry, just
Okay.
switching to my computer.
No problem. I breezed through this because I want to be respectful of your time. So anyway, so those are the three big reasons, right? We got business reasons because it's a really different business, different technology. We've got ownership reasons, and again, joint ventures and partnerships and things really make sense. Or bringing someone new in. I've seen people try and bring a new talent in and like shoehorn them into the existing structure. No, create a new entity, put it at arm's length, make it work. And then legal reasons and obviously protection of assets, protection of your core business, protection of you, but make sure you comply with all those regulations. Keep your nose clean. Okay, thanks.
Information. Can you hear me?
Now she can.
Now you
Yeah.
can hear me?
Yeah, I can.
Yeah, really appreciate that. That's tremendous information for all of us that are in the spaces. And interestingly, everybody that's on here is looking at that and doing this. So some really powerful stuff and efficiently went through. So we got a chance to see that. Anyone have specific questions for Nicole?
I have a couple. With the recommendation, so I want to have a LinkedIn group that I'd like to have, named and kind of branded separate from my machine shop. That wouldn't be a separate business entity though, right? I could just do that with branding and name recognition.
Yeah,
And
absolutely. And especially because you're not really doing any commerce through that group,
sure.
right? It'd really be considered like a branding effort for your underlying business or for a community.
What about podcasting and potential future consulting work?
Well, that's pretty different than your core machine business, right? And the other element of that is professional liability. When you coach, I mean, you got to put disclaimers and some different things. So I could see if you really were intent on making that a significant business, I'm not sure the podcasting per se, but certainly if you were, let's say you were going to consult and train other organizations on a skill that you have, right? You might break that out separately. It depends on, again, if it's going to be 10% of your time or something like that, then probably not. You just roll it in. If it's going to be, a really significant effort, and maybe that's your next phase, maybe you're going to sell the core business and that's going to be your next thing. Well, then that could make a lot of sense to separate those.
Okay, it's kind of a long-term plan. I'm hoping that the podcast now kind of spearheads this other piece later on, but I mean, it could be a long ways away still. So would you think that I could set that up later without problems, or do you think it should be put into place now?
No, again, what I said about Venture Wrench, right? Venture Wrench could be spun off. We've set it up with its own brand website, right? It's a little package. And what we could do is, right, spin that off at some later time. I think this could be kind of similar, right? Is that you're starting it now, but you're branding it. It's got its own website, blah, blah, blah. And you could then spin it off at such a time that makes sense.
Okay, all right.
Travis?
Yes.
I think with the podcast, if you turn into a podcast where, a lot of these podcasts will have shirts and caps and things that you can download and some of that stuff that you can purchase as your brand gets stronger. And I think if you start to collect revenue, I think you'd want to be in a business position for that. I think initially you're safe not bothering with the podcast, but the second you think you're going to move into consulting and bill for it, I think you'd want that to be in a separate entity entirely. And that at that point, you might also think about doing a similar thing with your podcast if you want it to sell, or you want to reference people over to that other business to purchase your stuff. But I just think it's whenever money is going to be transacted, that's when you want to establish, to Nicole's point, the whole day is that's when I want safety. That's when I want protection and all of those kind of things.
Okay.
And to Kevin's point here, if you're going to sell for think about that channel question. I mean, it seems kind of funny, right? That you separate something out by channel, but your podcasting would be an online business, right? Consulting would be a business to business agreement, and your core business is work for hire is a performance based. So they're really quite different channels. So yes, I'm with Kevin. As soon as money would start to flow from some of these new endeavors, a good idea. I mean, it's $75, right? to start a new corporation, just to protect
Sure.
yourself and to protect the core business and all the people who are in it, right?
Yeah, the business registration's pretty cheap. It's Nicole and all the legal documents she put together. That starts to add up. And she does a great job.
There is some truth to that. There is some truth to that. And I will say this about an LLC, right? Relatively low regs. Okay, that's the good news. But having an operating agreement that has some meat to it in an LLC is really important. Now, I have been known to copy an operating agreement that I already have, right, for a new business. But you see companies, sometimes they have the articles of incorporation, that's all they have. But the operating agreement gives you that heft that if there were ever an issue, a legal issue, you can say like, look, I have an operating agreement and I follow these rules and I never commingle and I do all these things. So yeah, that part of it it's worth the investment, right? It's worth it. So,
Okay,
was that helpful?
it was very helpful. I have more
Podcast,
questions, but
man.
I'll let somebody else talk if they've got anything.
Go ahead, Travis, just keep rolling.
All right, well, this can become the Travis show then. On the LLC versus S Corp, I have some serious confusion about this because when I file my taxes, I can't call myself an LLC, right? The IRS doesn't recognize an LLC. I have to file as an S Corp.
You should, well, I don't know what your legal structure is, so consult your attorney, but you should be able to file as a partnership. An LLC
Partnership,
is
yes.
considered as a partnership to the IRS. And an S Corp should never cross your mind unless that's how you started the incorporation.
So my first company, based on advice from an accountant, was to set up as an LLC for the state and file with the IRS as an S Corp.
Huh.
And so that's the way that I'm set up. So the IRS will actually allow your company to be an LLC from a legal structure, but taxed under the S Corp laws. And so that was my original Cutting Edge Precision LLC.
Okay.
And it ran that way until, I guess it was last year sometime anyway,
Okay.
probably in the summer. But now I have a LLC that's an S Corp called Minig Enterprises, and that business now holds smaller LLCs underneath it, and all of those are partnerships. So an S Corp can't hold another S Corp, but an S Corp can hold partnerships. So now I have these other business entities that are partnerships.
Sure.
And by the IRS, they're partnerships, and by the legal structure, they're LLCs.
So I don't know what the tax benefits might be of the S Corp. I'm not at all sure. Well, an LLC, basically what isn't expended or given as guaranteed payments to owners, right? So you as an owner in an LLC, you get guaranteed payments instead of a W-2. And then what is left rolls up onto the tax return of all the partners. So it's possible that your tax attorney felt like the S Corp allowed you to not roll all of that every year onto your partners. I don't know though, because that's not my game. I might have that looked at by another tax person because it just really sounds odd to me. S Corp tax stuff is very complex. And so I'm just not sure why that would be a preference to what's pretty simple. You generate some K1s and away you go on the LLC side. So I don't know.
Okay.
And you may spend $100 with Nicole and ask her that question, but it may just be a tax person's preference. Maybe they've dealt with them for a long time.
Okay.
So
All right.
There's Travis, there's also what I found out there is that different firms have different philosophies. So one firm really loves S Corps. They refer. I had talked to several. They referred me right to an S Corp, and that's who they deal with. While others are much like Nicole and sound almost identical, really to that. And I think he probably pays you to check with 2 or 3, see how you feel about it and what the actual execution of it is. Because I do know that some of it's just is colored by the opinion that they happen to have and the ease with which they're able to process stuff.
Sure.
Probably because they know the S Corp law better or whatever the reasons are, but
Right.
Some will favor one versus another. I'm not sure that it matters that much, but I'd find out.
I guess for me, the piece that's interesting and also confusing is that when, say you're filling out a financial application for a loan or something, they ask you, are you an LLC or are you an S corp? And in my way of thinking, it's like, it depends. I don't know how to answer the question. Because if you look at an IRS, the business form, you don't have an option for an LLC. You're a partnership or an S corp or a C corp or a sole proprietor, but you only have those four. And so what do I say when I'm applying on a financial document or a legal, something where the legal structure matters? Am I an LLC or am I this S corp? I don't know how to answer that question sometimes.
Well, so, it is a good question. You should probably talk to your legal team, but my understanding is that the answer to that question is how you are incorporated, because you can be incorporated in one way and then you can elect different S corp tax treatments, right?
Okay.
Right. And so
makes sense.
that's to me is an election as opposed to a change in your structure. If someone goes to the state of Utah, to the BEC, the corporations.utah.gov, and looks your company up, what are they going to see? They're going to see LLC. So
Okay.
again, you should probably talk to your attorney, but that would be my interpretation. That is the legal structure. That's the legal documents that you have, your articles of incorporation. Does that make sense? And then you've elected this tax treatment, which is separate.
That answer actually helps explain something I've tried figuring out for years. So thank you.
Well, there you go.
The other thing, Travis, you can do is ask the loaning institution, which one gets me the best set of circumstances?
Yes, sir. Always the question.
Yeah.
Well, thank you.
I'm set up as a LLC S corp as well,
Okay.
and I believe that the tax rate for an individual is less than a corporate rate, and that's the reason why I've been set up that way.
Well, on the tax side, I actually think I can speak to that a little bit, because the S corp rules about how an owner pays himself are pretty vague. They're actually not very black and white. And so you can get away with certain things about how you pay yourself, especially if you don't have partners. And so instead of taking out guaranteed payments, what you end up getting is shareholder distributions, and you have some flexibility. So where you get the benefit in taxes is in the federal income tax side of it. It's still a pass-through entity. So that's where it ends up on our 1040s. If you drop partners into an S corp, the distributions have to be pro rata. And so that is one rule that you have with an S corp that you don't have with a partnership. With a partnership, you can set up those agreements however you want with the guaranteed payments. So from a tax standpoint and how ownership and investors get paid, there are some distinctive differences.
There you go.
It's answering the question of, am I an LLC or am I an S corp, and who am I talking to, and which audience wants what information? That's where I get stuck.
Yeah, no, it's probably good again to check with the accounting team. And I think Kevin's advice is wise, right? Is maybe talk to a couple of firms and get a perspective. We have never, we are a partnership. We're an LLC. We're treated as a partnership. We give guaranteed payments based on work done, right? So essentially the role of as an employee, and then whatever's left is profits. Then we split pro rata at the K1 level. So.
Great. Other questions? It's a super complicated space, isn't it?
It really is.
It is. It is. But I appreciate it. Nicole, there's a whole bunch of notes that I didn't go through. So I'm hoping that we can share those that Nicole put together for kind of how do you do compliance? What are the things you should look at? Kind of going into detail on leasing and all those kinds of things. And we talked a little bit about, whether you should fund a new business with a loan or with an equity infusion. And she said, actually, a loan is great because the equity infusion, if you take the money back out, it's a dividend, even though you put the money in. Whereas it's a loan, as long as you have some loan documentation, you can pay yourself back without paying taxes on that principal. You have to pay taxes on the interest that you earn from the business, but not on the principal. And I was like, okay, that's helpful. That's helpful because that's a common question.
So speaking of a loan, could you do a loan from one entity to another?
Absolutely. As long as you document it. And she
Interesting.
repeated about 10,000 times, as long as you documented it. But yeah, so you, and so like some of the elements, right, you want a reasonably market rate interest rate, so the IRS doesn't complain about that. You generally want to have a term or payoff time frame. You wanted to have it look like an arm's length agreement or be an arm's length agreement between the two corporations. But it's pretty, as long as you document it, it's pretty straightforward, and as long as you have that documentation, the IRS can't spit on you.
Love that. I'm getting the feeling that we would benefit from a second type of session here and add, obviously bring Nicole in with us, but also maybe we add a couple of specialists, a couple of professionals that deal with this, the setup of it, and get 2 or 3 opinions with us.
Yeah.
And kind of do a nice Q&A around that, because Nicole's got us really thinking now, and I think we have some really interesting questions, and probably all of us are set up in slightly different ways. So
Yes.
I think it'd be interesting to have a panel probably around this and really get some questions answered.
Well, and you don't need this Nicole, but you need the other Nicole on the legal side, and then some tax pros. I think it would be a very interesting session. Let's face it, even if you have a tax team, it is easy to get crosswise with 7,000 pages of the tax code, right? So I think that would be super valuable, talking about the legal and tax ramifications of some of these choices. I love it.
When we had the banks come in and we had a couple of perspectives, what we found was they aligned nearly perfectly on almost every topic for a bank and credit union type of institution, but not for other kinds. But it was nice for me to hear that they aligned, so there wasn't confusion about how to deal with loans and how to go about dealing with banks and lending institutions that way. And I do think that there are strong opinions with setting up businesses and themes that organizations have, because they are particularly good at this one and not at that one. And I think having 2 or 3 perspectives would give us balance.
Yeah, no, I like that. I think it's a great idea.
Yeah,
That's a great idea.
I think we do that, and I still think we'll include you, Nicole, just since you're the reason we're starting all this trouble. But I think this is just critical information. It's interesting to me, and I know to others, because we want to get our ownership set up in the best possible ways. And I think some tax people and others can really help us understand it deeply. So this will get us, I think, started in a nice way to have a little bit of a series with this, Nicole.
Well, and I've done, we've done this, a meaningful loan, which we've almost all paid back. And at one point I was like, oh, maybe I made a mistake because, I've got this loan on my balance sheet. And then I talked to Nicole Call about it, and she said, no, really, at the end of the day, it makes more sense for you. This was a loan from us personally into our business to get it going. And looking back at DoBox, we put the cash in as an equity investment. And in retrospect, I think, oh, that was not the best move. So yes, I think having some of this advice up front would be super helpful.
I do too. And just hearing you talk about that very thing, sometimes we are not getting the right information to simplify the process, or we have a favoritism. We think that doing it this way versus getting the loan, when it turns out the loan is just very easy to handle, very easy to deal with everybody involved, IRS on down. So those are the kind of learnings I think that we can gain from this that would be an advantage to all of us.
Yep.
So we're off to a good start with that.
Yeah,
Any
no,
other
I
questions?
agree.
Go ahead. Yeah. Any other questions at all? Observations, thoughts?
Well, just along the lines of what you were saying, we, at least in my case, I started a business with no real business experience. So all I have to go off of is, what somebody who I thought was an expert at that point in time told me was the right thing to do. And now you're out 9-10 years and you start recognizing different ideas, different ways to look at things, other people that have had other experiences. And so moving forward, maybe there's some things I can do to change the past, but more importantly, anything I do in the future, having those types of resources and having a panel discussion like this is very beneficial, because I can just do that much better next time.
Well, and I think you put your finger on why is a community like this valuable, right? Of peers who are on this, traveling this same journey, that you get to hear about different experiences and different perspectives. And I'll be honest, like when we were doing our first company, we thought, oh, it's got to be a C Corp because we're going to raise money. And the attorney's like, you know, you don't need to do that, right? Here's how we do it. And I'm like, is that legit? And he's like, no problem. You know, 2 pieces of paper, do this rollover thing. It's great. So like that was expertise that we were thankful, frankly, to have found him at Stoll Reeves. But we probably would have made a big mistake. We would have started with a C Corp and had about a year where we had this overhead where the LLC was just so much easier to deal with. So.
Yeah, that's great. The other advantage to us bringing a panel together is we get information that would cost us lots of money independently.
Right.
So it does kind of help out here and there, doesn't it?
There is that.
We will follow up. That's our homework. We'll certainly do that. Nicole, do you have any closing thoughts for us?
Nope. It's just part of this big adventure, right? And making the best decisions that you can. But I do have to just advocate for Nicole's perspective, right, of the compliance. And I'll just tell you a really quick story. We were raising our round for DoBox, had this big high-powered legal team, and they sent me a ream of paper. And about I'm going through all these documents, and every 20 minutes I'm calling the attorney. Okay, Reed, can you explain this to me? And he'd explain it to me. And finally, after about like a bunch of calls, he said, Nicole, are you reading every page in those documents? And I said, am I responsible for what's in these documents? And he said, yes, you are. And I said, then I'm reading every one of them. And he said, Nicole, and I'm not saying this to credit myself, it was just a funny comment from him. He said, Nicole, you must be the best entrepreneur I know, because I have entrepreneurs who are like multiple time founders. I can't even get them to sign the documents, much less read them. And I have, since that day, I'm just slavish. If I'm going to sign it, I'm going to read it, because I'm going to be held to it. And I've got to kind of learn that discipline from a really talented attorney who is, he deals in public markets, and right, he really knows this stuff. So, kind of to Nicole's side, we got to read those documents. We got to know what they mean. We got to know what our obligations are as owners, because I think a lot of the tragedies you see in entrepreneurship, the stories that really, grab your gut and are really heartbreaking, is because people didn't know what their obligations were, their responsibilities were, and they got crossways with whatever, and it can be really devastating. So that's my close.
That's great counsel, wise counsel. Thank you to Nicole. We appreciate this, and thanks for collaborating with Nicole, letting her go down and get her missionary. That's great of you, and we'll bring her back. But we'll go to work on a panel. I think that's going to be a great next step for us. But we appreciate you getting us off to this great start. Thanks for the time. Thanks for everyone else joining, and we'll get information out to you as soon as we have it from Nicole, and dispense that to everybody, and then we'll go from there. And I'm assuming, Nicole, you'd entertain people reaching out if they'd like to.
Oh, yeah, of course. My email and Nicole's are both on the cover page. She's obviously a very talented attorney and busy. Yeah. Her schedule is busy, but very good. She really spent a lot of time just sharing really great advice. So I want to make sure I print out the notes, because we've got a lot of extra notes on it with great advice in there for you. So
great. We'll look forward to getting those. Thanks again. Tremendous job today, and we'll talk to you all soon.
Okay.
Thanks, everyone.
Thanks so much, guys. See you in a month.
All right.
Bye.